Hey, welcome guys. In this video, we'll be talking about how to trade reversal candlestick patterns at the beginning of the trend or at any point you see them in a trend or in a market condition. So right here before you, we have some reversal patterns that are common, which are the engulfing pattern. Each engulfing candlestick, like I said, is made up of a green candle and a red candle. Now this red candle is what makes this pattern the engulfing candlestick pattern. What it means is that sellers now are taking control of the market at these points. Listen, this is very important. It is very crucial. Now we have a downtrend. Let me make this better. Let me make it better. We already have this downtrend. Okay, not the downtrend. We already have this uptrend like this, and now we can see that the uptrend is experiencing a loss in momentum. Now when we have something like this, what's left is for us to anticipate the reversal pattern. Now I want you to understand that we have a bearish engulfing candlestick here. It may be a dark cloud cover, it may be an evening star, as the case may be. Now, when you have the bearish engulfing candlestick here, it makes sense that there is a resistance, a previous resistance from this area, from the past. I don't know if you're getting me. From the past, there should be a resistance. That means this is already a trading range and this is forming. Now, when this candlestick forms, excuse me, when this candlestick forms, now you have the sense to know that a reversal is about to happen. Now, when that happens, you can see that this now becomes a new key level, right? It becomes a new key level. Another key level you can find becomes the opening price of this previous candle. Here also becomes a key level. When you draw your key level like this, yes, this becomes a key level as well. This is how you now plot your key level for the bearish engulfing candlestick patterns. So how do you now trade this? Even if you've gotten your bearish engulfing candlestick pattern, you've gotten the key level, how would you know how you can trade this? Especially, like I said, in a trading range. Now I'm going to show you. When you want to trade this candlestick pattern, after the formation of this pattern like this is what you're going to do next. Let me make it better. Now this is what you're going to do next. You take this candlestick now, and then let me make it okay. Now, like this candlestick now, I'm going to duplicate it and I'm going to put it here. I'm going to make it a little bit smaller. Okay. Now remember that there is now a resistance level here and there is a resistance level here now. So this is what you want to see for a bearish engulfing pattern. Why is this pattern like this? Now we have a bearish engulfing pattern that signifies a reversal, and we have the next candle that went up to the first resistance, and then another second resistance. This candle went up, couldn't close above either of them, and closed below. You see how the candle, this running candlestick closed at the resistance. You see the closing price at the resistance is not here, is at the resistance. Now when you get a candlestick pattern like this, then the next candle with a high probability becomes a put trade. Now this put trade is something you can do for 1 minute. Why is it 1 minute? You can do it for 1 minute because there is no way for price to come up anymore. It's a ranging market. We saw this candlestick, so this resistance is going to hold price, and the next candlestick is going to be something like this. You see, it's going to be something like this, which is going to be a red color. Let me make it red. Okay, yes, it's something like this. Is what you have now. You see the candlestick, when it starts, it may go up It may go up, come down, go up, but it's eventually close like this or like this. Now, when it closes like this, you now have the beginning of a new trend. Now, this pattern on its own becomes what? A continuation pattern. I've shown you this pattern at the ebook. This is this is why I say you use this pattern at what? This a strong trend. Now, why did I say this is a strong trend? Because this is now the beginning of the trending range. Now, this is a strong downward pressure. So from here now, you can now decide to go for 4 minutes, 5 minutes, 0 minutes. But this is what you do when you see the bearish engulfing pattern. I hope that is clear. So if that is clear, let's move on to the next pattern, which is the dark cloud cover. Now, the dark cloud cover is different from the bearish engulfing candle in terms of the formation, but it's still the same thing. It is a reversal pattern, but there is a slight difference in how the levels are being made and how you trade it, and I'm going to show you now for the dark cloud cover. Now, the dark cloud cover, there is, if you look at this candle, the first candle, like I told you before, this might be, let's say, a downtrend. This might be an uptrend, sorry, like this, that has lost lots and lots of momentum. Yes, let me make it better. Something like this. You see, an uptrend, and it has lost momentum. Now, when this uptrend is going, excuse me, I just want to make it clear. Okay, now when you see an uptrend like this, when you see a huge candlestick like this candlestick now is not a continuation candlestick, because this trend has already lost momentum. So this is an exhaustion candlestick. An exhaustion candlestick is always a reversal sign, signals a reversal. In a trending market, it may signal a pause or a retracement, but in a ranging market where I told you these candlestick patterns work best, this is a signal for a reversal. Now, when you get the dark cloud cover, when you get the exhaustion candlestick, there is a way you trade an exhaustion candlestick whereby this candlestick becomes your put trade, but we are not talking about the exhaustion candlestick for this trade. For this video, we are talking about the dark cloud cover. Now, how would I put my levels for me now to know that this is a place where I can execute my trade? Now, the dark cloud cover, when you see this candlestick is big, the next candlestick should cover at least the 50% of this candlestick. I'll repeat, this candlestick should come down to cover at least the 50% of this previous candlestick. So now, where is the 50% of this candlestick? I'm going to make it here. It should be here. Yes, it should be here. Now you see, this is the 50% of this candlestick pattern, right? Now, since this is the 50%, look at the next candle. You see it cover. It can become like this. It can be like this, but it should cover the 50%. Now this looks better. Now, since it has covered the 50% of this candlestick, like I said, this is always going to be what? A resistance. And now we have one resistance, we have another resistance. Once again, you see what happened here? This is the same thing. This is exactly what is going to happen again. And here we have it. Now, this is exactly what is going to happen again. You see that the next candle comes back up and close at this line. You see this resistance? If it closes there, then you do a put trade here. But if it does not, it may come back. It may be that this candlestick is going to come up here and closes exactly at this place. Then you also do your put trade at these points here. This candle becomes your trade and you do your put trade. likewise this candle too. If this candle should come and close this you see that the candlestick is going to, the closing price is going to be very close to the level. All you have to do, like I said, if you watch my previous video and I talked about entry points, you trade above this level in case this next candle becomes a weak red candle. Now, in every of this case, I'm going to show you what you should not do if the price action acts in a certain way after I explain each and every one of this. So this is what we have for the dark cloud cover, and this is what we have for the engulfing pattern. So now you can tell how you can draw your key levels. Now the next pattern is the evening star. The evening star is also a reversal pattern. The evening star is a very good pattern, a strong reversal pattern. Now the good thing about the evening star, well, all reversal patterns, they work in a trending market for the continuation of that trend, but they cannot reverse a trend. Like in most cases, this reversal pattern, for instance, if you have an uptrend and you see an evening star, a strong uptrend, and you see an evening star, the next candle, if it appears like this candle will not be coming down, it will be going up. It's likewise here. But now in a ranging market, if you see an evening star, then these things are going to happen. Now the good thing about the evening star is this: it has 3 key levels. Why? Because it has 3 candlestick patterns. Now I'm going to show you how you get your levels. Automatically this is a high, so you can get it here. Now why am I putting this red and green bar? Because the evening star can have red, it can have green, it does not matter the color. You see, I'm not using the wicks, I just want to focus on the bars and the level. Now if you look carefully, this is also another level here. I'm going to show you now. Yeah, now why is this a level? This is the opening price of the middle, like this middle candlestick, and then the opening price of this last candlestick here. Yes, this is also a key level. As simple as that. So what we want to see now is, again, we want to see something like this here. Yes, we want to see something like this. So when we see something like this, we say, okay, it's closing at the resistance, and then we can do our put trade here. If it's not closing there, it can close here, or it can close here, and then above the level we do our put trade. So this is how you trade your evening star, your dark cloud cover, and your bearish engulfing pattern. Now the last is for the downtrend. In a downtrend, when you see this pattern, the reverse will be the case. Now I want you to understand that it may not form exactly like this. I'm just using this as an illustration, so just so that you know, I'm just using this as an illustration. So the next is what? The engulfing pattern. In this case, the bearish engulfing pattern. Now we have a downtrend just like we had here. You see, we have this kind of downtrend, and then let me put it here. Okay, we had this downtrend, which is a loss in momentum. So now when we have this downtrend, we see the bearish engulfing candlestick pattern. So where is our key level? Simple. We are going to put our resistance, our support now here at the opening price, and we are still going to put another one here. Sorry, at the closing price. See, at the opening price of this previous and at the closing price of it, now we have our engulfing candle. Now what we want to see now is a candlestick that is forming like this one here. Okay, let me use this. Okay, like this. We want to see a candlestick like this that has a lower wick. whereby the lower wick now represents a strong rejection of lower prices like this. Now this can be a green candle, mind you, this can also be a red candle. You see, this candlestick might close as this candle, there might be red candlestick. You see, this is a green candlestick, which is showing how strong this place is. But in this case, what I want to show you, that if this is a green candlestick, you are to wait after this price open for it to come down a bit, and you see that movement before you go in. If this is a red candle, you just have to wait for the price to go up a bit if it's not closing at the resistance. If this is not going to close as a resistance, but it is a red candle, just wait for that upward movement and try to get your trade above the closing price of that red candle. Likewise, this evening star pattern. And so this is what is happening here. When this is a green candle, you just wait for the price to come down a bit, and then you go in for 3 to 5 minutes. 2 minutes you can go in. But if this is a red candlestick pattern, just like this, which we are talking about, sorry, I made a mistake. If this is a red candlestick pattern, yes, like this, what you do is simple. You put your trade, you place your call trade when the market opens at this support. So at this support, what we now have is what? A call trade here. We have a call trade here, and it is simple as that. You see, we have a call trade here. Yes. So this is what we have for the bearish bullish engulfing pattern. Now we now come to the next pattern, which is the piercing line pattern. Now the piercing line pattern is the opposite. Like I said, it is the opposite of the dark cloud cover. Once again, we want to see that this candlestick has a close that is bigger, or that the next candle closes above the 50% or the half of this candlestick, and this candlestick is doing what we want to see. You see, it's already closing above that 50% mark. So once again, when we see something like that, what are we going to do? We are going to trade how we know how to trade best. So the next candlestick should be closing here. Let's say the next candlestick is like this, so it should be closing where? Here. The red candlestick should be closing like this. When it does close like this, and we see, we have to see maybe a kind of rejection, a little wick above. This little wick above should be at least greater than the wick, the wick below. Let me make it better. The wick below here should be greater than the wick above it. If there is any wick above, it should be greater than it. When you see it like that, then for 3 to 5 minutes you can go up. Now for 1 minute you can go up, because this support line will hold the price down. But you need to see the movement of this running candle. It needs to start by going down from here first, and then you got to see this rejection. You see how the price rejects it, and then you go with it for your call trade. If it's not going to close like this, if let's say it closes like this, let me remove this wick. If it's going to close like this, okay, something like this. Now when it closes like this, it's the same thing for all of them. I'm just using this as a case study. If it closes like this, then you begin to ask yourself, it's not closing here, it's not closing here, so what should I do? Now you have to wait for the next candlestick, something like this. Yes, you have to wait for something like this. Now when it comes here as well, you already know that this is a reversal pattern, because this is a ranging market. Now if it's closing here, this becomes a shaving head pattern. Now shaving head patterns at this point, they will always signify reversal. So for now, you can go for 3 to 5 minutes upward, because even though you go for 1 minute trade, the next candlestick might be something like this, giving you a fake breakout, and then the next candlestick will go up. So you are not sure, because this is not the the ideal pattern is this, is always like this too. You see a hammer and a shooting star. This is the ideal pattern, but it can happen in any way. All you have to know is that there is a loss in momentum, there is a reversal pattern, you know your key levels, and when price gets there, you are ready to do your trade. Now, the last of these is what? The engulfing pattern. Sorry, the morning star pattern. Once again, you know your key level. Your key level is the closing price, the opening price of this four last candle, which is the red candle, the closing price of the middle candle, which might be a doji, a wick red, or a wick green candle. That's why I use these two color. And the last is the opening price of the candlestick that engulfed all of them. So when you get something like this, wow, you use what I said, you use the candlestick. All you have to do is wait. You wait like this for this candlestick to close below here. You saw there is always a wick below, a tiny wick or any wick that shows the rejection of lower prices. You see something like this. Now when you get it like this, bam, you are now good to go, because this is going to be what? Your trade. Here is going to be your trade, and you can do this for 1 minute, you can do this for 5 minutes, you can do this as much as you want. So this is how you do your trade. So like I said in the beginning, there are ways you don't trade these patterns. Why? Because the movement determines how how your probability of success may be. So for example, if let's say you have a candlestick like this, you already know that this is a call trade. You already know this is a call and this is a call. But if you have a candlestick like this, now the next candlestick, when it appears, it begins to look like this. Let me make it clear. If the next candlestick begins to look like this, okay, now this is let's imagine this is the last candlestick. Now the next candlestick appears like this, and the moment it appears, it went up. Okay, let's say the moment it appears, it goes like this. You don't trade. No, you don't trade. This is volatility playing its trick on you. What you now need is this. Now you know that this candlestick has gone up, so it is clear that the market wants to go up. Right? If it's clear that the market wants to go, what you now need, you see this kind of movement, and then it comes back down. Here is the point you should enter your trade. There is a reason why we could say there is an entry point. This is where you should enter your trade. When you enter now, the candle might close like this, it might close like this, but it's not going to close like this, because if you had entered here, like in the last video, you lose. Even though your direction is right, the entry point matters a lot. So you lose if you do it like this. So you want to enter when the market comes down, and then it takes your trade in the morning. So this is how you trade your reversal patterns. Now, like I said, if you have an uptrend, a strong uptrend, none of this pattern is guaranteed to work. It will work, but it will not really reverse a strong trend. Now, if you're trading in a range, then fine, it's going to work like 80, 75, 85% of the time. It will work because you are in a trading range. The pressure is at the support and the resistance, and these candlestick patterns now are forming to confirm that support and resistance. And now within that support and resistance, we now have other supports and resistances. For in this case, we have other resistances, and in this case, we have other supports. Remember that this candlestick is forming at a strong support, or we can say at a demand. So I just use this one now to illustrate how this red line, you see this red, is a strong supply zone and a strong demand zone. Now if this is a strong demand zone, imagine you have a demand zone, you have a loss in momentum this, this is, or this should be all red candlestick to illustrate the position of the previous trend. You see these three candlestick, they should be all red candlestick. Let me make them red. Okay, I can't do that now, but you get the point. Now imagine this is a weak trend, a loss in momentum. Now you have a demand zone whereby there has been multiple reversals in the past. Now you get this pattern, they will have to work 80% of the time. So this is what I've been trying to let you know. Likewise for a downtrend. So when you get these reversal patterns, you now find that you have a high probability trade setup. Now in our next video, I'm going to continue to show you more patterns and how you can use them in the best way. Now this is not to say that when you get this pattern, you already know how to trade. You also know how to map out the entire chart. You need to map out your entire chart, because you may think, okay, this is clear, I know how to do this, but you can get easily carried away because you now know how to trade like this. You may want to repeat it over and over again. Now you begin to trade this not in the right market condition. You begin to trade this in a very volatile market condition. So you have to know how you can trade this pattern. And by that, I'm coming up with my courses whereby I'll be mapping out this candlestick pattern. By mapping out, I mean the algorithm, that means the foundation whereby the support and the resistance, the demand, the supply, the support and resistance, everything, the foundation that is holding them together. This is what I'm trying to say, that you have to map out that foundation first. That foundation needs to be in ground, and from there everything springs up. So I'll be giving more of these strategies in the future. So if you haven't, please do it to like this video, share and subscribe to the channel so that the channel can grow further. Thanks for being with me up until this point. So until next time, bye bye.